Mic check. Mic check. Can you hear me? All right. Well, at least I got the mic working. All right. The earnings report comes out in 2 minutes. I'm gonna see if I can get the data on the screen and then cover a little bit of it. I want y'all to pay attention to the range that we're trading in. So I gave y'all that range the other day, that at $18, $16.94, and then $15.91. Like, notice how we fell right in that range, like, and we bounced right off that middle support, right? Like, it's playing out exactly as I expected it to before our knees hit. So let me see. There it is. Okay, so we got our first pop. All right, earnings is out. I'm gonna try to see if I can get it on the screen. See what this information is. We'll see if it holds, but we never. Sometimes it's the pump before the dump, but we'll see. I'm looking for the presentation. It's not active on their page yet. It's just the webcast. All right, so we spike and everybody reviewing the numbers. Strong earnings. Net revenue is 734 million. Net income is 332 million. Let's go. Hold on, was that in line with what I just told you? Hold on, put this on the screen. God dang. It's not cool being away from the studio. Can y'all see that? Like, this stuff is like transitioning at the same time. All right. So yeah, I think we crushed it, but nonetheless, yeah. So look at this. For the first quarter, adjusted net revenue was 725 million and 745 million. While Wall Street had penciled in a revenue of 688, we destroyed their expectations. I hope y'all see that. Okay. Company expected to adjust net revenue between 3.2 billion and 3.27 billion, while analysts had us at 3 billion. So of course, like, dude, like, I'm not surprised that we absolutely destroyed the expectations. And I'm looking for that EPS, which I think that EPS, like, based on these numbers, should be about the 0.06, 0.07 that I hold up for fourth quarter adjusted earnings. Okay, we're at 5 cents, so we beat estimates by 4 cents. That's the estimates. Okay. Revenue is 730 million. Estimated 6775 million. Okay. All right. So this is important. Fourth quarter, the financial services and tech platform segment made up a record 49%. Adjusted net revenue up 40% in the year ago. Let's go. All right, that's one article. I need to get the full report, but nonetheless, that's solid, y'all. So we got a lot of volume pumping into this. You can see. Let me get rid of studio mode so y'all can just see what I'm looking at. Okay. Y'all got charts, so y'all can see what I see. So I just want to make sure I get the data up. So they're trying to decide where we're trying to go, and part of the pause is, one, what's going on with Galileo. It says that we're up a percentage, but did we announce any banks or anything like that? Yeah, we destroyed it. Okay, I gotta put something on my screen quick. 1 second, y'all. How y'all feeling about the numbers? Canva. Let's go. All right. I'm about to put my expectations on the screen real quick pretty soon. Looks like we're stuck in that 1770 area right now. Oh man, we got a big red candle right now. Somebody don't like something. All right, here we go. Look at that chart. Hey, how's it going, Evolve? What's up, Marlon? What's up, BF? What's going on, y'all? All right, so we're gonna do the song and dance for a little bit. All right, and I already know how they manipulate the stock. So just give us a minute. Let me get some stuff on the screen that got sent. There we go. Put this on the screen. So look, again, this zone that we're in, like, I'm not worried, not yet. Because I called this range between 18 and 1591. Okay, I called this range. And then y'all see where I was. I was a little over on the EPS. The revenue were pretty much in line. I gotta check the GAAP net, financial services, and we're over on the tech revenue. I got 30%, they were 40%. So they exceeded their expectations. Member growth, I gotta double check that, and the adjusted EBITDA. Okay. Good morning. Hey, Christine, how's it going? What's up, Evolve? Lakita, my sound is low? Well, I'm talking low because I'm like in this lobby right now. Hold up. So you might have to turn your volume up. All right. Yeah, I see the chart. I know you might not be happy with the chart, but I'm not worried about the chart. I'm worried about the facts. I'm worried about the facts and essentially how things are looking in that regard. And these, okay. me see if I can pull up some more data while y'all stare at this big red nasty candle. Let's go to the 5-minute. Okay, there we go. That won't be there yet. So guidance, this is important. And of course they got rid of that. They're hiding shit now. So we expect the full year 2025 EPS range of 0.25 to 0.27. Oh dang. Dude, look at that guidance. Look at the EPS. We're talking about from 0.04, 0.05, 0.07 to 0.25 to 0.27. Come on now. Estimate of 0.28. Okay, that's huge. What? EPS 0.05. I'm about to go find this. Yeah, everybody's trying to get their facts together. They're putting out like messed up information. I can already tell. Let me go get it from the source. Let me get it from the source. All right, I got it. I got it right here. We're gonna look at it. Y'all, the market's not open. The market's not open. So what I'm gonna do is look for, I have it on my screen, just so y'all know. I have the report pulled up. Good morning. Let's get it. All right, so I'm going through the earnings presentation right now. And I'm just, okay. We're gonna compare. We're gonna compare. Now, if we open like this, we open like this, right? Like, what I care about is how the numbers look, and that's why I go light. Like when I get this close to earnings, like I made my 300+%. We did, and when we got stable and we started to, when we closed below 1796, that was where I was like, man, I'm thinking that we're gonna pull back before we zip up, and I called that out, and that's why I only went with like a couple contracts, maybe one or two, and then I had some on hold that I was already in and up on. But let's see here. Give me a minute. Windows capture. Go here. All right. All right. So I'm gonna get some things up here and try to organize this so the screen looks like it makes sense. And I'm gonna reduce the size a little bit of the dang report. What am I talking about here? All right, so y'all can probably already see my screen. Can y'all see that okay? By the way, like I am set up like in the lobby of a hotel, and y'all can't even see me. And it probably is just gonna be like that because something's wrong, like when my camera's not like connecting. So I'm here though. Let me know if I'm not here ever. And then turn on a little bit of music. Hopefully it's already there. And music isn't too loud. Okay. What's up, Shy? What's up, Harlem? Let's get it. All right. So yeah, we see that big red candle. We had a originations at 7.2 billion. That's a new high. Hold up. All right. Based on what I'm seeing, it sounds like our tech platform might be a little flat. Let's see here. So we had 10.1 million members. So that's dope because I called another. I called maybe a little bit too much. How many did I say? Member growth. 670. I can't see my screen. 670 million. Okay. But we hit 670,000. But we hit 10 million like in September on Twitter or something like that. Y'all forgive me, I'm still just trying to get my bearings. Your boy is I'm trying to do the most right now. On vacation. Okay, so 14.7 million product. Okay. Phone originations. That's dope. 23.8. Okay. Physical year Q4. So adjusted net revenue. So that's the 730 million, right? And I got us at 750 million. So I'm not far off. The adjusted EBITDA. Oops, go back. How do you go back? So yeah, the adjusted EBITDA is 198 million, right? I got 175. So we crushed my adjusted EBITDA. Okay, you can see it on my screen. All right, the net income, the GAAP net income. I got 70 million, and they got 61 million. So I was a little high, but that's okay. We got the 5th straight quarter of profitability. So we're heading there. We got pretty much everything hit that's required for us to get into the S&P 500 that I was talking about in the previous video. Adjusted EPS 0.05 or GAAP EPS of 0.29. So we didn't crush the analyst expectations in this front by much. I think they had us at 0.4 and I had us at a low of 0.06. So yeah. Tangible book value growth, 465 million. Okay. So fiscal year 2024 EBITDA. That's just adjusted. I'm trying. So look at the record adjustment for EPS. That's crazy. Full year profitability. So all good things, right? Like for the most part. The only thing right now I'm looking at is right here. So Galileo signed processing deal with Direct Express, the largest government card program from federal. Okay. Galileo went live in the US. Oh, this is just a whole fiscal year. Banking core implementation. No, okay. I want to see Galileo. Continuous innovations in brands. We already know this. 10 million members and counting. Loan platform expansion. Okay. Financial services. Okay, we know that. Products, members. Okay. As I'm clicking through these screens, everything in blue is pretty much the growth that you see with SoFi, which is absolutely dope. But something's missing because it's pulling back a little bit more. It's getting out of my range that I wanted us to be like kind of safe in. Mind you, the whole market is coming down, but still, like if you have outstanding numbers, you should blow it out the water and should be able to hedge the market, right? But don't forget, this is still 12% shorter. Tech platform. So we're seeing growth in the tech platform, which is what we want to see. But so the year-over-year growth is kind of slowing down, which makes sense. You have this bell curve. You're growing though, year over year. That's all that matters, is that you're growing. But slowing down. slow down here. Got a little bit of a bump here, but this is not significant. Adjusted net revenue growth. Okay, I'm tracking all that. Lending platform. Okay. Credit information. I want to see. Okay, that's not bad. Personal loan credit performance. Originations. $18.5 billion. Okay, so that's a key one. EBITDA, net revenue. Okay. So these are the numbers that we already called out, right? We called out the EBITDA of 666 million. Adjusted EPS. So they're talking a full year profitability of 0.15. So look at this though. From 2021, 2022, 2023, now 2024. This is a huge move and a step in the right direction. And the guidance is saying that we are looking to be at 0.27 versus a 0.05 that we're at right now. So the forward guidance is solid in that regard. But I need to see more on the loan origination, lending, and Galileo, the tech platform. How we all doing today? I don't have the details as far as like how the stream is looking. So if y'all know that, you know, we got a bunch of people in here, we don't got no likes, or we got little likes, come on now. Come on now. I'll just see if I can pull it up for my own viewership. Okay, we got 16 viewers. No, we had a total of 75 views. Okay. I gotta do this verification BS, and then I'm about to get back to the metrics here. Okay. Cancel. See, now my stuff is tweaking. One second, y'all. I gotta verify some stuff on my screen. I can't verify. It doesn't matter. If y'all are in here, please hit the like, hit the subscribe, all that good stuff, okay? Because everything's being funny when you're overseas. Are you on the 5-minute time frame? Yes, I am on the 5-minute time frame, and yeah, that looks nasty. I'm actually about to probably dig right. I'm not gonna go to the chart yet, not just yet, but I'm about to. All right, so guidance, original guidance. So look at our actual versus our latest guidance. Okay, we killed our numbers, but again, I told y'all, even if we hit expectations or like barely got over it, like we exceeded expectations, but nonetheless, something tells me that Galileo didn't do his job. And Galileo, the tech platform, is what's setting SoFi apart from other fintechs and banks, right? So here's our 2025 guidance right now. Adjusted net revenue, expectation of 2.8 million in member growth. EBITDA 30%. Okay. Margin, okay. Okay. And then this is Q1 2024. Oh no, this is last year, so we're good. Here's our 10.1 million members. Okay, so after we hit that 10 million, which was after the last report, we hit another 100,000. Products and services, full year. Okay. What up? Lending products. Look at the growth. Okay. Financial service products. Okay. I'm still not seeing what I want to see yet. Student loan originations. Of course, that's increasing. Right where. Home loan originations is pretty light. I mean, it's definitely an increase of 1.8, but that'll pick up. Adjusted revenue landing. Now we're tech. Here we go. Tech segment. All right, here we go. So this growth, like, you know how lending and everything else has been growing exponentially. Like this right here is just very incremental. Like their tech platform. Look at the revenue. Like right from 2022, 315 till now 395. Like, so there's no significance here, and this is what we continue to see a problem with. So we're still not. SoFi still isn't where it needs to be. Now, the guidance for 2025 that makes sense at 0.27. At 0.27, that's telling me that they fully expect to have that big bank landed. Good morning, Kelly. Good morning, Marlon. But I'm almost done with this segment here. We'll tune in to listen to Anthony Noto talk a little bit. Once that starts up in like 30 minutes. Interest income, yeah, we already know that. Average rate, yep, okay. Personal loans, student loans. We're gonna see this steady increase. And then y'all, student loans, if y'all didn't know, Biden was trying to do the whole forgiveness, and everything was in forbearance for like a minute, right? Well, Trump comes in, everybody's thinking that Trump is just gonna just kill it, like, and say, no, scratch all the student loan payoff BS. Nah, we ain't doing that. Instead, he pauses everything. Like, he pauses the decision, I think, of the Supreme Court or whoever, and they are reviewing the data to see how Trump wants to move. And here's my thing: is Trump is a dude that he's all about likability. And if his base and his people are like wanting him to do something about student loans, rather it's reduce the interest rate by 0% to 0%, or like killing some of the debt, period, he might just do it. So you just got to understand who the commander-in-chief is, and the fact that he didn't kill it, that just means that he got enough backlash from people, or he heard enough from his base that it's of interest to them, and now he needs to figure out how he's gonna move, right? And the dude's been busy, I guess, he's been, I don't know, he's built different. I can tell you that for some 80-year-old dude, whatever. Assets under management, 36. Okay, they're gonna give us all clarity on this stuff. Like, I see it all, but again, the main thing, we already went over the core numbers, right? The stuff that's on my screen and how I was tracking in comparison to like what they reported. And pretty much everything's in line, or they exceeded even my expectations. But like I said, the tech platform was a biggie. And look at the chart. Look at the chart, right? Let's see if I can. I think I'm at a point where I don't need to studio mode this anymore. I'm gonna blow up the chart quick and bring it up front. Hold up. Oh, trading view. Give me a minute. All right, let me pull this up. So, man, the news is coming out on SoFi. SoFi Technologies adjusted revenue. Yep, we already know. Adjusted EBITDA. We already know. Like, all of it's positive, but they're not showing any negative in here. That's okay. Tech platform. See, it's adding at least 2.8 billion new members in 2025, representing 28% growth. Well, I mean, that's great, but no, that's not the tech platform. All right. They're not really showing much that we haven't already reviewed. These mofos getting cooked. Thanks for doing this for us while being on vacation. Much, hey, yeah, all love. Like, one thing I figured is that I'm on vacation, but because I'm so into SoFi, like, yeah, there was no way I wasn't gonna be thinking about this. So I figured, man, all types of bugs are crawling up. Man, hold up. I wish I could see, like, the sun just came up. The sun just came up. All right, so this is good. I mean, again, look, it's hopefully we hold, but this is the range that I called. And look what happens. Like, your boy don't really miss when it comes to these levels. We fell into this range. We traded a little sideways. We fell down to the bottom of the range. And we whipped back into it. Now we're trying to figure it out. So it could just live here at the bottom of this until the earnings, which is in 30 minutes. Okay. So they want to hear some detail. They want to hear what the heck is going on with Galileo. The report is a report, but we kind of need to know, like, okay, how hot are we? Right? Like, how close is Galileo for landing something? Because last time in the report, they said, after the rate cuts or whatever, like, we should have some people making a decision to, like, come on board. Like, we should be able to close some deals. Well, the rate cuts happen, man. But I warned you guys that today is SoFi day as far as the earnings. But in 2 days, right? What happens in 2 days? It's something that affects the banks. It affects the banks. Let me see. So, all right. So in 2 days, we have the Fed funds rate and the FOMC statement that comes out. Okay. Are they putting password restrictions on this stuff now? Okay. I might have put this on the screen so y'all can see what I'm looking at. Let's see if I can. All right, so I'm gonna give y'all some definitions. Send this to my computer. So yeah, it's gonna battle here. I mean, if it falls off here, then man, watch out below. Hey, how y'all liking that Tesla put though? Did it worked out? It worked out a little bit. Hopefully hopefully it stays down here, because I called Tesla. We made a whole video about it. I was wrong early, and then, you know, of course, I'm stubborn because I seen the play. I was just end early. We back in it. Okay, so this right here, transform fit to screen. So this right here is, you can go to forexfactory.com. This website allows you to essentially like keep up with what the current event's going to be as far as economic details like that are coming out by the Fed. And it's a way for y'all to kind of figure out like how you can trade that day, what to expect, why it might be volatile, you know, whatever, why you might see a big sell-off or anything like that. All right, so essentially, I'm about to screenshot another piece on at 1 p.m. Eastern Standard Time. I'm going to assume the Fed funds. Hold on, the Fed fund rate is going to come out. We're forecasted at 4.5%, and the last reported number was 4.5%. So we are pretty much expected to not move, which is fine. Now, y'all see the screen, I think. Hold up, I gotta send something else. So y'all are on the same page as me. Yep, the rate, yeah. If they cut rates, they don't need to cut rates, Charles. That's the thing, they don't need to do it. They say, yeah, they can do whatever they want to do. But then it's like, okay, what happens if they pause? So here's the forecast right now. Okay, let me get this out of the way right here, and we can see Sofi. So what does this mean, right? What does this mean? So interest rates, I'm gonna read this. So the Fed fund rate pretty much measures like the interest rate at which depository institutions lends balance is held over the Federal Reserve. So it usually affects, the usual effects is actual greater than forecast is good for currency. Okay. The rate decision is usually priced into the market, so it tends to be overshadowed by FOMC statement, which is focused on the future. So right now, this sell-off that we've seen, what this text is saying is that we're forecasted for like pretty much like a balanced or almost worst case scenario. Like, so the market's pretty much getting ready, and it's like kind of in a comfortable neutral position, right, before it decides if it wants to take off or crash down. So do we want to see new highs or not, right? So NQ had this little sell off, and then now it's kind of pumping back up. See that? So that's a interesting recovery, but it's getting stopped at one of my levels. So let's go back to Sofi. But Sofi is gonna probably be choppy right here until 8 o'clock. And then even after 8 o'clock, we're waiting for guidance. Yeah, so essentially we're trying to see if we're going to see a rate cut or not. So from November, we pretty much hit, we hit forecast. We were pretty much spot on. In September, they forecasted for 5.25%, and we actually hit 5%. So September 18th. So we can take that, right, and we can see how the market reacted when rates came in, or when the data for the Fed funds rate came in lower than expected. Okay, so we can go to September 18th, and this is how you can kind of like do your research, right? And I'm gonna get out of this, go more per hour, reset my chart. I'm gonna find September. So October, September. So here we go. September, October. Oh, hold up. I gotta get my brain on. September 18th. So this right here, on this day, vertical, September 18th. So on this day, we came in lower than expected, right? We had just did a pullback, right? We broken this little bit of a downtrend, we popped, right? And then we broke this descending channel right here, and then we were just on a pump, right? Y'all see that? So from the sell-off before the rate, and then rates came in, and then we just pumped. All right, but look at the sell-off that happened before that date came in. Oops, come on, doing too much, Rel. Cancel. How do I get rid of this? Okay. Yeah. So it's always a little bit of a sell-off before the rate hikes. Then it retraces to find like some middle ground. You can see right here, this right here was kind of like the range. And then it just continued going up. Okay, so now I'm gonna reset this, see what we look like right now. Go back to the 15-minute chart. And then we're gonna pull back up on Sofi. All right. Wow, what a sell-off though. Huge drop. All right. SoFi's battling right now. The Fed's rate cut. Good morning. What's up, BRJ? What's up, everybody? I'm gonna try to get rid of some stuff now off this. Okay, it no longer matters. I'm gonna take a peek right now at the rest of this earnings report to see if there's anything else that stands out for me that's worth me sharing on the screen. Nope, nothing worth it. Okay. Webcast starts in 20 minutes. Not there yet. I got my pages up, ready to go. Okay. All right, any questions, y'all? Anybody hop in, like, anybody go too heavy on SoFi? Or anybody scared? Did you give yourself enough time? Like, tell me about it. Okay, because this right here, remember I called the top. Remember I made a video, you know, I don't like bringing up old stuff, but at the same time, I made a video after we had this pump. And I said my target, take profit target was 1796. 1796. This was my, it's like almost to a T. So I called this level. I took out most of my profits, right? And then we pumped a little bit more, and then I just kept shedding profits, like, you know, just taking my gains. And then the moment before market close, right, we fell below 1796. I said that there's a strong chance that we could pull back because we needed to close above this level, and we didn't. We seen weakness the moment we crossed it because these candles got smaller, the volume got weaker, right? So we knew this was kind of going to happen, or we had a feeling, right? Remember, traditionally, a stock typically pumps before it dumps. Like before earnings, if it's going to dump, it'll pump. If it's going to pump, it'll dump. And then after earnings, you see like a rapid recovery most times. Hey, shout out to you, Charles. You were listening, or you just like, you know what? You're not putting the bag up to risk. That's the main thing though. Like if you're up 300%, let me tell y'all something. we are up 300% on a play, right? And you're holding that into earnings where there's like, there's question marks. Like, come on now. I mean, I understand risk, but man, that's a lot of risk. That's a lot of risk. I really wish I could get my camera up here, but y'all probably see my screen and it's saying like, oh man, we can't read your camera. Let me see if webcam. Hey, good morning.
Hey, you sure you don't want to hop on the tractor?
Want to get the stroller with him?
It's cool. Yeah.
Oh, cool, nice. Good morning.
Good morning. Hey, the apple juice looks good, man. Yeah.
Bills fans, not happy.
All right. How we doing? I'm waiting to see how it plays out. That's how you got to do it, Harley. So that's why I took most of my money off the table. Yeah, that's why I took most of my money off the table, and I have. Let me see my position on stuff. I know there's one larger position. That's the one I had like 35 contracts that was up like over 300%. But I think I left like 6 contracts in that one. But like, I'm not worried about it, you know, because I took off like 80%. I don't even know. Whoa. I took off most of my profits. So SoFi went from $18 to $15.95. Crazy. I'm sitting in 3 contracts right now on my trade account. Oh, hold on, I lied. I got 3 contracts for the 31st that expires the 31st, and then I got, those are probably gonna like open worthless if nothing changes. Then I got 1 contract that's set up for February 7th expiration. Now I got cooked on Tesla last week. Even though, like, you know, I made the video and I was right, but my contract position, like the strike price, was just too far out of the money for me to kind of come ahead. So I did not come out well with Tesla. But before close, I did hop into a Tesla put, but that's because my information that I posted and made a video about was still valid. We're gonna stay with SoFi, but I just want y'all to see, because this was a recent video I made. So I'm in this, and I don't know, let's see if this is a rapid recovery. This is trying to recover, but we dropped pretty substantially from 405 all the way down to 379. But I hate this, because now we're seeing momentum. So like, we need to pretty much get rejected at 395 to keep coming down, but I'm not sure if that's gonna happen. That's a huge gap though with Tesla. And because I'm so far out of the money, at least I was, I don't know how this is gonna print. But we'll see. Anyway, back to SoFi. I'm gonna see if this earnings call is gonna be available yet, and I'll keep the stock up while we're doing it. Are you calling a play today? Hell no, I'm on vacation, Marlon. I called all the plays though, big dog. I put out silver, I put out Tesla, I put out SoFi, and like, so you guys know the levels to which we're playing. Like, silver did its thing, just so y'all know. And I'm on the 4 hour. Let me get out of here. Where's, okay. So silver's still doing this thing. We're still above our take profit target. So the moment we drop below this, again, I said the take profit target one could act as a support, but at the end of the day, our stop loss was $27. I know it's far, on this, but technically it's like all the way down here, and you're just supposed to be dollar cost averaging into this, or buying low, selling high at the take profit targets. So I'm still in silver, okay, but we're above my level and we're headed to the next take profit target. At least I think so. Typically, what you see is, like I said, silver is like a hedge against the market. So when the market's crashing, silver sometimes likes to run up. So again, if I'm hedging and thinking Tesla's gonna fall, I think the market's gonna fall, which I was in SPY last week too. But again, it didn't fall when I wanted it to fall. So I didn't give myself enough time, and those contracts were too expensive when you're looking more than a week out. So I guess I just threw money away. So, but let's go here. SoFi isn't doing well as we get closer to the earnings call, but we're gonna find out. Hey, but Marlon, if you want plays, if you're looking for a play, go to my playlist that says options trade plays, okay? Look for that one, because there's a bunch of plays in there that are still relevant. Okay, so let's check and see if they have this stream up. Where's my mouse cursor? Refresh my page. Here we go. Okay. No, they got their music, but I'm not gonna listen to their music. All right, and I will get that ready. I'll make sure that our chart looks good. I missed it. I was at work. Hey, it's okay. The thing is, there'll always be another play. Not a big deal. Your boy's gonna get recalibrated here on vacation, and then when I come back, then we can talk. And you can see what we got going on. The weird thing is that. Okay, this thing is weird. Like, everything on my computer is like backwards. It's like not working the way it's supposed to. That's why my camera ain't on. Like, if I did like Streamlabs or something like that, if I did use different software, probably be alright. But then I would struggle sharing both my screens. So Nope. Windows capture. Is this it? Yep. Okay, we're gonna do that. We had it right. Yeah, I'm doing shit manual, y'all. I got it. And I wonder if my battery's gonna live. How much power do I have left? Good morning. Okay. We're gonna do that. All right, so how much battery I got left? 37%. Your boy might not make it. You got 8 minutes. I keep rinsing and repeating SA all day. That's like the easiest bag to get. If you're not greedy, like, just go with the bottom, go with the top, buy the bottom, buy the top, and you're all good with the silver. It's a moneymaker, and like the risk is not great. Those contracts risk is not great at all. Hey, can somebody tell me how many people we got here right now? Hey, what's up, Lisa? How's it going? Yeah, if y'all can hit the like button, your boys in vacation mode. Trying to be here for you. You know what I mean? I was gonna be looking at it anyway, but I'd rather be sleeping. Oh, let me just stretch my legs. See if I can give y'all. Right now, I'm just in my lobby. How much time we got? Wouldn't it be something if my computer dies like right as the earnings was about to start? I'm at 35%. I think I left my charger up in my room. Yeah, so we have like this patio, but the room, like the patio doesn't have a light. Like, so it was dark out. Like now it would be like an opportune time for me to go up and get there, right? But and just be in the comfort of my room, but yeah, it didn't work out that way. So that's kind of my view right now. Yeah, just plug it in. I don't got nothing to plug it into. Hold up. Actually, yeah, there ain't no outlets where I'm at. There ain't no outlets. So, yeah, your boy might die. But honestly, though, I can probably. I don't know if there's an outlet outside my room either. They probably wouldn't do that. I'm about to confiscate this concierge desk, though. They might have an outlet. Nah, I'm gonna show y'all my kids' first time at the ocean. We got 5 minutes, and they're absolutely loving it. I can only imagine. Like yesterday was like travel day, so it definitely was exhausting. But today I expect them to wake up fully ready to go. So dad needs to be ready to go. Like they're having an absolute blast. Right? So first time they're enjoying themselves. The beach was kind of crazy, so we couldn't get too far into the ocean, but yeah, we're doing our thing, man. I appreciate the love, Christine. Thank you so much. All right, I'm at 33%, so I'm holding in there. We got 4 minutes. Let me walk around this lobby and see if there's an outlet somewhere. I mean, I probably just sit at this concierge desk and plug in there. But what are they gonna do? Tell me to move? They might. Hold on. I'm checking now, y'all. Let me see if I can get away with it. I do have a charger. How much time we got? 3 minutes? We got 3 minutes to move. See if I can move without messing something up. All right. It's a random cat. I didn't expect that. Yeah, tabby cat at that. All right. We just had a random ass cat that looks like it's been eating good at this resort. Just walked past me. All right, I'm taking over the concierge desk to see if I can charge up. And then after this, my goal is to get my butt back to sleep. We'll see. All right. My kids be taking it out of me. All right, come on now. Let's see if I can get this charged up. 2 minutes. All right. What do y'all think is gonna happen with the SoFi stock? We already fell well below. The mark. Dude, now there's 2 cats. Hold up, let me see. They're scavenging. Okay, hold up. Come on. I'm hustling, y'all. Just give me a minute. There we go. All right. Boom, boom, and the plug-in. Dang, the plug-in didn't work. Plugins didn't work. The outlet not working. The outlet in the phone, just for show. The phone doesn't even work. It's a fake ass concierge. Excuse my French, but we're about to start up. We'll see what happens. Unmute this. What's up, Doji? The vacation is okay, man. Right now, we just got through the first day, like the travel day. So, and you know, it could be better, but we'll see how today goes now that we're rested and we can get around a little bit more.
My name is Douglas, and I'll be your conference operator today. At this time, I would like to welcome everyone to the SoFi Technologies Q4 and full year 2024 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, please press star followed by 2. Thank you. With that, you may begin your conference.
Thank you and good morning. Welcome to SoFi fourth quarter and full year 2024 earnings conference.
What the hell?
Joining me today to talk about our results and recent events are Anthony Noto, CEO, and Chris Lapointe, CFO. You can find the presentation accompanying our earnings release on the investor relations section of our website. Unless otherwise stated, we'll be referring to adjusted results for the fourth quarter and full year of 2024 versus fourth quarter and full year of 2023. Our remarks today will include forward-looking statements that are based on our current expectations and forecasts and involve risks and uncertainties.
What do you think SoFi is worth?
These statements include, but are not limited to,
personally,
our competitive
but
advantage
my
and
average
strategy,
is like $6,
macroeconomic conditions and outlook, future products and
I
services,
might not buy anymore.
and future business and financial performance. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and the subsequent 10-K filing, which will be made available next month. Our actual
y'all
results
hear
may differ
the
materially
earnings call right now?
from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are described in today's press release and our subsequent filings made with the SEC, including our upcoming Form
Somebody let me know.
10-K.
Can you hear?
Any
the earnings
forward-looking
right now?
statements that we make on this call are based on assumptions as of today.
Might be too
We
loud.
undertake no obligation to update these statements as a result of new information or future events. And now I'd like to turn the call over to Anthony.
Thank you and good morning, everyone. 2024 was undoubtedly SoFi's best year ever. Our ability to consistently deliver durable growth and strong returns was once again the direct result of our relentless focus on innovation and brand building. I'll begin by covering our key results for 2024, which significantly exceed our expectations heading into the year. Starting with our durable growth. Members and products are leading drivers of our performance, and we achieved record growth on both fronts. SoFi now has more than 10 million members. That's up 34% year over year and up 10x over the past 5 years. We had another record quarter of new member adds in the fourth quarter at 785,000 new members. In Q4, we also had another record quarter of new product adds at 1.1 million new products, resulting in 32% year-over-year growth to over 14.7 million. Financial services products drove over 89% of our total product growth. This reflects the deliberate diversification of our business towards more capital-light, fee-based revenue sources, which we expect to continue in 2025. Our strong member and product growth powered record revenue growth in 2024. Adjusted net revenue was $2.6 billion, up 26% year over year. Together, our financial services and technology platform segments generated $1.2 billion of revenue, up 54% year over year. These two segments accounted for 47% of our adjusted net revenue, up from 38% last year. It's safe to say SoFi is not just a lender anymore, and we continue to see significant growth opportunity across our financial services and technology platform segments. In our lending segment, adjusted net revenue grew 11% to nearly $1.5 billion, well ahead of our initial expectations of being flat to down. This strong growth was driven by record originations of over $23 billion, up 33% from the prior year. Our total fee-based revenue across our business was a record $970 million for the year, up 74% from the prior year. This was driven by strong performance from our origination fees, loan platform business, referrals, as well as interchange and brokerage. Importantly, improved monetization continues its strong contribution to growth. Financial services revenue per product increased from $59 in the fourth quarter of 2023 to $81 in the fourth quarter of 2024. That's up 37%, and we see continued upside as our newer products mature. In addition to delivering durable growth, we delivered strong returns and profitability. In 2024, adjusted EBITDA was a record at over $665 million. All three of our segments achieved record contribution profit at strong margins. In fact, financial services posted its first full year of profitability, and we are still just scratching the surface of the massive opportunity that exists. Our EBITDA margin for the year was 26%, up nearly 500 basis points year over year. This improvement was driven by an incremental EBITDA margin of 44%, well above our target of around 30%. Net income was $499 million, or $227 million, excluding non-recurring benefits related to deferred taxes, which Chris will discuss momentarily. Even without these benefits, 2024 was our first full year of GAAP profitability, and we have now delivered 5 consecutive profitable quarters. While we remain focused on achieving our long-term aspirations, we continue to deliver strong performance each day in each quarter. Earnings per share were 39 cents, or 15 cents when excluding non-recurring benefits related to deferred taxes. Tangible book value ended the year at $4.9 billion, a year-over-year increase of nearly $1.4 billion. This includes $271 million from non-recurring benefits related to deferred taxes. Our strong financial performance is the direct result of our investments in innovation and brand building. These investments attract new members and clients into our ecosystem and lead them to adopt more products over time. This fuels our growth and ultimately our returns as we scale. Looking ahead, our opportunity to scale remains massive, and it feels like it's day one of our journey. People want innovative solutions delivered seamlessly and digitally. Yet most traditional financial services firms are encumbered by physical locations, internal bureaucracy, and outdated technology. They've struggled to evolve. Since day one, technology and innovation have been part of our DNA. It's how we built and scaled products more rapidly, creating the digital one-stop shop for financial services in just 7 years. Our members often come to us for a specific product, then adopt others over time. As satisfied members do more with us, it creates a flywheel that we call our financial services productivity loop. Here's how we know it's working. In 2024, 30% of new products were opened by existing SoFi members, and nearly 40% of new members opened a second product in the first 30 days. More recent cohorts are taking a second product even faster than what we've seen in the past. This performance is a clear indication of our success in getting members to the right product and a validation of our one-stop shop model. Bringing new members into our productivity loop starts by having a trusted household brand name. A key part of our marketing strategy is working with like-minded partners that help us reach new audiences and build awareness of how we help our members get their money right. For example, we recently unveiled a first-of-its-kind partnership where our brand is presented side by side with a sports league's brand in TGL presented by SoFi, a new tech-driven golf league broadcasted live on ESPN from the new state-of-the-art SoFi Center in South Florida. Given SoFi is part of the league's brand, we get millions of impressions everywhere the TGL brand goes, allowing us to reach a broader audience over and over. Overall, our brand building efforts are yielding strong results. In 2024, our unaided brand awareness reached its highest ever level at over 7%, up nearly 170 basis points from last year. We are also innovating to strengthen and diversify our business so we can serve more members with less balance sheet risk, supporting both our growth and returns over the long term. Our loan platform business, or LPB, is one example. Over the years, we've built a powerful lending platform with strong member acquisition, underwriting, and servicing capabilities. But prior to 2024, we had two options: hold loans on our balance sheet to generate net interest income, or to sell loans to manage our balance sheet size, risk, and capital. This past year, we created greater optionality to meet the strong demands from our members and capital markets buyers through LPB. Here's how it works. We partner with buyers like Fortress to originate loans fitting their predefined criteria, and we earn fee income as we fill the orders. These loans are originated on the buyer's behalf so they don't sit on our balance sheet. And importantly, we keep the servicing rights. This model is a game changer. It allows us to serve more members, including people that we might have otherwise declined for a variety of factors without taking on incremental risk or capital. It further diversifies our revenue with additional fee-based income, and because we keep the relationship, we have the opportunity to provide the members with additional products and services. In 2024, we originated $2.1 billion of loans through LPB, which brought our total company loan originations to $23 billion. Beyond LPB, we've continued to build and enhance products in our financial services segment. In just a few weeks, we'll introduce a variety of new benefits across our one-stop shop and a new fee-based subscription option for SoFi Plus. Our premium membership tier, SoFi Plus, has been incredibly popular, but only available to members who enroll in direct deposit. For the first time, members can access our highest APY, a 1% match on recurring invest deposits, extra cash back on SoFi travel, interest rate discounts, and more for a low monthly fee. We will provide SoFi Plus members with more than $1,000 of value annually unlocked by paying a monthly subscription or doing a monthly direct deposit. In Q4, our investments expanded access to alternative investments through partnerships with 3 new private market funds, including the Templum Cosmos Fund, which offers sole exposure to SpaceX, and through our new robo-advisor platform developed in partnership with BlackRock. Having access to alternative investments is a top priority for many retail investors and one way we're helping our members achieve their ambitions. SoFi now has 2.5 million invest products, with 70% of the growth coming from existing SoFi members. We continue to iterate on the value proposition, which is driving 2 dimensions of growth: engagement and monetization, both of which we believe will double in the intermediate term. In credit card, we continue to thoughtfully position our business for future growth. We improved our underwriting and rolled out 2 new products tailored to our members' needs: the Everyday Cash Rewards and Essential Credit Cards, helping more members earn rewards and build their credit. Our financial services segment also operates as a marketplace where we connect members to third parties and collect referral fees. For example, We make loan and banking referrals for borrowers we don't currently serve, including small and medium-sized businesses. We also refer members to partner insurance carriers through our Protect product. While still small in the context of SoFi, these referral revenue streams that are high margin grew significantly in 2024. That takes me to SoFi Money, our most successful financial services product, which serves as an example of what these other businesses can become. Since 2020, Money has scaled significantly. Products grew from 646,000 to 5.1 million products today and increased 51% just this year. Money helped drive nearly a 9x increase in revenue per product for financial services overall. Since acquiring our bank license in 2022, we've grown our deposits to $26 billion by iterating, learning, and iterating to make our product, marketing, and service better every day. For example, we know that frictionless money movement is top of mind for our members, so in 2024, we introduced Zelle and improved our self-service wire transfers. We believe Invest is the next business to follow the footsteps of Money, and we plan to allocate greater resources in 2025 to scale this business. Turning now to Tech Platform, another fee-based segment. Our Tech Platform gives a broad range of clients, from banks to fintechs to consumer brands, the ability to create, launch, and run financial products. In 2024, Tech Platform reached 168 million total accounts, up 15% year over year. Entering 2025, we are seeing strong demand from new potential partners. Let me give a few examples from the past few months that demonstrate the diversity of our client base and the strength of our offering. First, we recently were selected by the US Department of Treasury for Direct Express, a prepaid debit card program that approximately 3.4 million people use to access their federal benefits. This is a testament to our Tech Platform's differentiated offering, as well as our strength and reliability. We're excited about the integration that will take place in 2025 and the financial impact that we will see in 2026. Second, we just signed a large US-based financial services provider that offers short-term consumer loans, card services, check cashing, and other financial products. They've built a large, loyal, and highly active debit card portfolio over the past 2 decades and will now rely on our technology to power existing and new capabilities. Once they fully transition to our platform in early 2026, they will be a top 10 client on a revenue basis. Third, we've signed a partnership with a leading hotel rewards brand for a co-branded debit card program launching in the first half of 2025. This is a new, differentiated offering that will expand our footprint among consumer brands. These deals represent more predictable revenue from larger established brands with notably higher average deal sizes. We're excited about these wins and would note that the implementation and the integration cycles will be gradual, and the revenue impacts will most likely be felt in 2026. As you can see, 2024 was a tremendous year overall. Our record revenue, profit, members, products, and returns all demonstrate the success of our innovation and brand building and are a testament to the absolute grit of our team. I have never been prouder of a year-long performance than I am of 2024. Even with how great 2024 was, the future has never been brighter for SoFi than it is in 2025. The operating environment is the strongest it has been since I joined, with lower interest rates, strong employment, active capital markets, and we have a vibrant brand and the only digital one-stop shop offering in the US, resulting in a diversified business model that is well positioned to capture the opportunity ahead. With that, let me turn the call over to Chris to provide more detail about the quarter and year and to share our detailed guidance for 25.
Thank you, Anthony. 2024 was indeed our best year ever, and we finished strong with an exceptional fourth quarter. Adjusted net revenue for the quarter was a record at $739 million, up 24% year over year and 7% sequentially. Adjusted EBITDA was also a record at $198 million with a 27% margin. Excluding the non-recurring benefits related to deferred taxes, adjusted net income was $61 million and adjusted EPS was 5 cents. This was our 5th consecutive profitable quarter and first profitable year. As noted, our fourth quarter GAAP results included non-recurring tax benefits of $271 million. These were primarily related to the release of the majority of the valuation allowance against our deferred tax assets.
SoFi dropped
Each
like
quarter,
this, it just
we
puts
assess
us
the
further below
recoverability
the
of our
capital
net deferred
required to
assets,
be in the S&P
most of
500.
which are related
But
to net
everything else
operating
looks
loss
pretty
and tax
solid.
credit carryforwards from prior years. The timing of this release was due to our recent strong financial performance and forecast of continued profitability. Moving forward, we expect a normalized effective tax rate of approximately 26%, which can be impacted by future discrete tax items and mix of income. Turning now to our segment performance, starting with our non-lending segments, which comprised a record 49% of total adjusted net revenue during the quarter, reflecting the continued diversification of our business. Starting with financial services. For the fourth quarter, net revenue was $257 million, up 84% year over year. Contribution profit was $115 million, up 4.6x year over year. Contribution margin improved significantly to 45%, up from 18% last year. Net interest income for this segment was $160 million, up 47% year over year, which was primarily driven by growth in consumer deposits. Importantly, non-interest income grew 3.2x to $96 million in the quarter, which equates to nearly $385 million in annualized revenue. In Q4, our LPB business generated $63 million in fees, driven by $1.1 billion of personal loans originated on behalf of third parties, as well as referrals. Additionally, LPB generated $4 million in servicing cash flow, which is recorded in our lending segment. In total, our loan platform business added $67 million to our adjusted net revenue across these two segments. We are off to a strong start in Q1 as well. Our loan platform business recently agreed to initial terms with Blowout capital funds for up to $5 billion of personal loans over 2 years. Once finalized, this arrangement will represent our largest LPB agreement to date. In addition to our LPB revenue, we continue to see healthy growth in interchange, up 63% year over year, driven by $14 billion in total annualized spend in the quarter across money and credit card. Shifting to our tech platform. For the fourth quarter, we delivered net revenue of $103 million, up 6% year over year. Contribution profit was $32 million at a contribution margin of 31%. Revenue growth was driven by continued monetization of existing clients, along with new deals signed in new client segments. Our recent client wins have been more diverse, including major consumer and commercial brands, as well as large enterprises in Latin America. Turning now to our lending segment. For the fourth quarter, adjusted net revenue was $423 million, up 22% from the same period last year. Contribution profit was $246 million, with a 58% adjusted margin. These strong results were primarily driven by growth in net interest income, which increased 31% year over year to $345 million. This included a 23% increase in average interest earning assets and a 68 basis point decrease in cost of funds, which was mostly offset by a 62 basis point decrease in average yields. During the quarter, we achieved record loan originations of $7.2 billion, up 66% year over year. Personal loan originations were a record at $5.3 billion, of which $1.1 billion was originated on behalf of third parties through LPB. Collectively, personal loan originations were up 63% year over year. Student and home loan lending both had their best quarter since 2021. Student loan originations were $1.3 billion, up 71% from the same period last year. Home loan originations were $577 million, an 87% year-over-year increase. The fourth quarter was our best quarter of capital markets activity since going public. Overall, we sold or transferred through LPB over $3.4 billion of personal loans, home loans, and secured loans. In terms of personal loans, we closed $950 million of sales in whole loan form at a blended execution of 105.5%. We also closed a $525 million private ABS transaction that included significantly lower WAC collateral relative to our balance sheet at an execution of 102.3%. All deals had similar structures to other recent personal loan sales, with cash proceeds at or near par, and the majority of the premium consisting of contractual servicing fees that are capitalized. These sales included a small loss share provision that is above our base assumption of losses and immaterial relative to the exposure we would have otherwise had if we held the loans. In terms of home loan sales, we closed $507 million at a blended execution of 100.7%. Additionally, we sold $90 million of late-stage delinquent personal loans. By selling these loans, we're able to generate positive incremental value over time versus selling after they charge off, both from our improved recovery capabilities and by maintaining servicing. Finally, we sold $243 million of secured loans at a par execution, while also executing $199 million of new secured financing. Net, inclusive of all new issuances, paydowns, and loans sold in period, our secured loan balance decreased by $189 million sequentially. Turning to credit performance, the health of our consumer remains strong. Our personal loan borrowers have a weighted average income of $158,000 and a weighted average FICO score of 744, while our student loan borrowers have a weighted average income of $134,000 with a weighted average FICO score of 765. Our credit trends continue to improve after seeing delinquencies peak in the first quarter of 2024. For personal loans, the on-balance sheet 90-day delinquency rate was 55 basis points in the quarter, a slight decrease from 57 basis points in Q3. The annualized charge-off rate declined to 3.37% versus 3.52% in the prior quarter. Had we not sold any late-stage delinquencies, we estimate that including recovery.
All right, so essentially I said that if you're looking to get into calls right now, hold on. If you're looking to get into calls right now, hold on. Does this work?
The on-balance sheet 90-day student loan delinquency rate remained flat sequentially at 12 basis points, while our annualized charge-off rate decreased 7 basis points to 62 basis points from 69 basis points last quarter.
Can you hear the SoFi earnings?
The data continues to support our 7 to 8% maximum life of loan loss assumptions for personal loans, in line with our underwriting.
So what I was saying, if anybody's looking for calls that open, just know that I would be looking if we retake 1591. Like we have a solid bar that opens above that, and if we don't, then I'm waiting for SoFi to fall down to 1397, and then hopefully we see like a wick from 1367 back up into 1397 above that. If we see strong value and a wick up from there, then I'm more likely to look at another call. But you have to understand that 1591 would be that resistance level that it may not break, but we have to see.
Continued improvement. Additionally, looking at our Q1 2020 through Q3 2024 originations, 58% of principal has already been paid down, with 6.5% in net cumulative losses. Therefore, for life of loan losses on this entire cohort of loans to reach 8%, the charge-off rate on the remaining 42% of unpaid principal would need to exceed 10%. This would be well above past levels, further underscoring our confidence.
Yeah, understand that we got a $5 billion deal with SoFi got a $5 billion deal, so that's a big deal that's not really being shown in the charts right now. But nobody knows what it means, and nobody knows who the client is.
The weighted average coupon, the constant default rate, the conditional prepayment rate, and the discount rate comprised of benchmark rates and spreads. At the end of the fourth quarter, our personal loans were marked at 104.9%, down 80 basis points from the end of the prior quarter. This change was a function of the discount rate increasing by 51 basis points to 5.29%, mostly due to the underlying benchmark rate increasing by 63 basis points, partially offset by 12 basis points from spreads tightening. As we've previously noted,
look at the bounce,
both of these changes
like
are empirical, based on the actual market data, not assumptions. Additionally, any fair value impacts that resulted from interest rates increasing were offset nearly 1-for-1 by hedge gains.
Left on battery, I might die.
Furthermore, we saw a 10 basis point decrease in the weighted average coupon. Slightly offsetting those negative impacts, we had a slight decrease in our conditional prepayment rate from 26.1% to 26.0%, which has an immaterial impact on the overall change in the mark. When a borrower prepays, we are still capturing the principal, and the impact to the value of the asset is only based on the premium above par at a given point in time, which is very small relative to the principal outstanding. At the end of the fourth quarter, our student loans are marked at 104.1%, down 133 basis points from the end of the prior quarter. This change was a function of the discount rate increasing by 41 basis points to 4.4%, driven by the underlying benchmark rate increasing by
It could.
76
Just
basis
know, everybody,
points,
the earnings is actually
partially
very
offset
good.
by 35 basis points from spreads tightening. Additionally, we saw a 28 basis point increase in the conditional prepayment rate from 10.7% to 11.0%.
I have 8% battery.
There were no
so we
material
might
changes
die
to the
in
weighted
middle of
average
this, but I'm
coupon rate
trying to
or the
stay
conditional
here
prepayment
until
rate.
opening.
Turning to our balance sheet, where we remain very
Hit
well
the like, hit the
capitalized.
subscribe, become a
In the
member.
fourth quarter, total assets
Much
grew
love
by
and appreciation.
$1.9
Your boys
billion,
on vacation doing
driven
this,
by
so
approximately
I really appreciate
$910
it.
million of loan growth, approximately $830 million of growth in other assets, and approximately $80 million of growth in cash, cash equivalents, and investment securities. Total liabilities grew by $1.5 billion. This was driven by member deposit growth of $2.6 billion quarter over quarter, while non-member
Russell?
deposits were reduced by $1.2 billion.
So Lamar,
Total deposits reached nearly $26 billion in the quarter. Over the past year, our strong organic deposit growth has further strengthened our balance sheet. Currently, there is a 193 basis point difference between the interest we pay on deposits and the interest we pay on warehouse lines,
Alright,
which
the market's
translates
about
to approximately
open.
$500
I'm
million
paying attention.
in annualized interest
Paying
expense
attention to
savings
Tesla,
from growing our
'cause
deposit
I
base
gotta get
over
out
the
of a
past
play,
year.
but also SoFi.
We continue to benefit from the mix shift
I'm getting my
towards
charge
deposit
ready on
funding,
my phone
along with
to
our
close some
ability to
positions.
sustain healthy deposit
Just now.
versus lending betas. As a result, we reported an average net interest margin of 5.91% for the quarter, up 34 basis points sequentially. This is a function of maintaining asset yields and reducing our overall cost of deposits. This continues to be in line with our expectation of maintaining NIM above 5% for the foreseeable future.
That's okay. Hold up.
In terms of our regulatory capital ratios, our total capital
Can you hear me
ratio
now?
of 16.2% at year-end
I'm trying not to blow
remains
y'all ears off.
comfortably above the regulatory minimum of 10.5%.
How about that?
Tangible book value grew $465
Okay, it's
million
8:30.
sequentially to
Look alive, y'all.
$4.9 billion, including the non-recurring benefits related to deferred taxes. While these are non-recurring benefits, it is value retained in the business.
Market's open, right?
Tangible book value per share at year-end is $4.47.
Or am I behind on
up from
hours? Because I'm like
$3.61
in
a
Mexico.
year ago. Looking forward to 2025, after a year of bolstering our capital base, reaching GAAP profitability, as well as the scale required to drive continued profitability, we want to better tilt our incremental revenue growth toward investment. We have
Oh, dang,
significant
man.
untapped addressable markets
I'm
to tap
tired.
on. We have proven
Kelly,
that
thanks.
the more we invest, the more we produce durable growth and
I'm not
strong
staying up
returns.
another hour, y'all.
In 2025, we plan